A very good evening to one and all. On behalf of SRCF, I say your warm welcome to all of you for CP Study Circle meeting on transfer pricing, overview and recent developments. Now let's welcome with warmth in our hearts and with a big round of applause our honorable speaker, Mr. C.A. Kuldeep Sharma on the stage, please. Now let's all rise for our ICI motto.
सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्लं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Now may I call upon Mr. Mukundan on the stage, please. He will take us through the profile of Mr. C.A. Kuldeep Sharma. After the introduction of speaker, Mr. Kuldeep Sharma will take over. Thank you all.
Good evening, everybody. A great pleasure in introducing the resource person for today's evening, Sri Kuldeep Sharma, who qualified himself as a chartered accountant in November 2012 and joined PwC in April 2013. He specializes in transfer pricing audit defense, advanced pricing agreements, planning studies and global documentation for compliance requirements. In his career as a transfer pricing specialist, he has worked on APAs involving jurisdictions such as Ireland and Japan. Kuldeep has also assisted companies with operational transfer pricing comprising of planning and implementation phases for intellectual property valuation and royalty related aspects. He has worked across industries like automobiles, pharma, IDES, electrical and electronics. He is also actively involved in representing PwC clients before the tax authorities. Now I welcome Mr. Kuldeep to take us to the today's evening program. Thank you, sir.
Good evening, everyone. You had, the snacks and not hearing any good evening. Once again, good evening, everyone.
Good evening.
So, thank you, Mukund, sir. So I could, I'm seeing there are a few places which are empty. So I want to have a active session where there could be two teams which I want to have, like team A and B, where there will be a little bit of role play which will also be there. So could I request? Don't worry, it is not a test of knowledge. It will be on the basic thing. Thank you. So, on transfer pricing, so what is the revenue which is, if you see the revenue which Indian government is collecting it from the direct taxes, if you see the major portion comes out from the transfer pricing. And it is because it is very subjective. It is very subjective where you have to see, it is basically based on the facts. Here and there, any change in the facts will lead to higher revenue or higher taxable portion. So the most important thing here is the factual thing, that how do you document it. Facts are very important in transfer pricing rather than law. So if you see the transfer pricing, the principles which we have imbibed is coming out from a OECD, which is Organization Economic Development, which is for the works for the entire global, looking after all the world tax affairs, what is happening globally. Is there any favorable position which we are giving to other country which is disadvantageous to other countries? So it takes care of all those things, and it is like kind of a guideline which is being provided that this is how transfer pricing needs to be done. It's just a guiding principle. The country can frame their own principles, and if you see from the OECD point of view, India is just right now a participating member, but a very active member. It has not signed till now that it will abide by all the OECD principles, because India frames their own rules and regulation, but around 80% of the regulation has been imbibed from the OECD guidelines. Are you able to make out anything from this picture? Protecting tax avoidance, yes. So I could like everyone to go to on a YouTube channel, and you can see there is a 2 hours debate which goes on with the Google CEO and also on the Amazon CEO, where he is being questioned by not by the tax authorities but by the federal government of UK, that I understand that you are doing a business and you are abiding by all the tax laws in my country, but my question is whether it is ethical or not. Are you practicing an ethical thing to abide by the tax law, or you are practicing an unethical thing to abide by that? So the question were on those lines. So it's a wonderful video which you can see on 2 hours, where the question could be on, like, for example, if you go to Amazon on the UK, and if you order a book from a Kindle, so the resident of those countries, the bill, it comes as Amazon UK. The name of the company is Amazon UK. As a citizen of UK, we also prefer that our country grows multifold times the other countries. So if you see sometimes made in India or India Inc., the perception which you form is it is an Indian company. But if you see on that bill, it says Amazon UK, and if you get into the facts more detail, the address and register, it is somewhere else. And they used to offer only a minimum portion of tax, which the perception of the customer were that they are already offering to the tax. So that's what it was being questioned. Yeah, I agree, but why have you named it as Amazon UK? You are creating a perception in the mindset of all my customers that it is UK company. You will offer every tax there. Why is it happening? Is it an ethical practice or not? So that's where, like, even why I am telling all these things is it is not just it will not be questioned only by the tax authorities or income tax. It is also taken very seriously by the government also, that what is happening, whether what you are doing is only from tax perspective, or you have a business reason behind doing all those things, whether it is rational, whether it is ethical. So that's the depth of this subject. And if you see from my point of view, everyone in this room knows transfer pricing. They do it from the age of 10, where you start negotiating. with your parents that I need this, and you will come up with so many facts. I need this because of this reasons. I need this because of this reason. And the same thing happens in the business case also. So there's nothing new which I'm going to take you through. It's just whatever you do on a daily basis or what business does, you could be looking after your clients who will be taking decisions, and also clients, and also if you're working in any company, you will be also taking decisions, and there could be a message which could come from the CEO or CFO that this is how it has to work. There are so many things which goes behind that, and so that is where like it's majorly based on facts. And if you so if you see on this thing, so Google, the major case which has come in Google like 2 months back, if you on the Google website, if you're going on any YouTube or any channel, so there are two kinds of advertisement. One is paid advertisement, one is on free. So if you go through that, there should be a disclaimer if you're getting paid for it. For example, I'm a company A, and I'm telling you that you advertise me for this on YouTube. And whenever you type, for example, I need a packers and movers, so my company name should be on the top. And if you see, if you put it on Google search, and if my name appears, is it because of my customer rating, or is it because of search result, or is it because Google is putting me on the first? So there should be a disclaimer on that it is a paid advertisement. I have been sponsored for that. So those things were not happening, and Indian government has questioned Google on that, whether it is ethical. Why are you not mentioning it? There should be a disclaimer so that the customer knows it, that it is a sponsored content. It is not based on the perception of the customers. So that's what, like, you have to document all those facts when you're going for a transfer pricing. So this is why it is so important. And if you see, it has started in 2001, and if you see, the Indian tax collection right now has reached around 65,000 crores only from the transfer pricing department, and it is so fact specific. I will take you through a live example which you will see, which you can see in your daytime, and how things changes because of just one simple fact on that basis. So why do companies go cross border? So these are the reasons. One is location advantage, which generally tax authorities of view that India has a location advantage. It's both on the cost and also on the quality. If you see the quality of engineers which we get in India when compared to other countries, it is better. We can train them better because of the English knowledge which we have. And other things on the cost benefit, proximity to market, like US and India, if you see the timing difference, the daylight timing difference is exactly mapping. Whenever there's a night there, we will be working for them, and whenever we complete our work, they will getting an update from us. So it is completely fit for us. And if you see why most of the BPOs are started in India, is because of that. It's not only because of cost. So there are other business reasons that why most of the BPO centers were in India and still there. And on the tax advantages, so I think the Economic Forum has a different view on the tax advantages. India has been considered as the top one rigorous on the taxation and on the transfer pricing also. So it is flowing out of the transfer pricing, because most of the companies feel that the transfer pricing has to evolve more in Indian context, because we try to deviate more from the global practice. In the recent last 2 years, we have brought in many laws so that we are aligning to the global practices. So one is the concept of arbitrage: high price, reduce quantity; low price, increase in quantity. So the topic which I am taking through, you have to have one thing in mind, that this topic does not require you to have a chartered accountancy knowledge. You just require to know that 4 factors of production: land, labor, capital, which every country wants to use and wants to use it for their own advantage. So it is more of economics then a chartered accountancy. So yeah. So the rewards are aligned to the function, asset and the risk which you undertake. So this is a jargon which has been provided in our section Rule 10D of the Income Tax Act, but let me take you through. So can I have two people? Just two people, I will give you the example. Let me see how you negotiate at that point of time. Anyone could do. Anyone. Just a 2%. One more. Yeah. I think you need to applaud a person. One more. Or you need me to help you out and picking. Sir. Please, sir. It will be only on basic. I am not going to touch you on anything on the anything from Indian income tax. Yeah, you can have it. Yes. Please. So, sir, you are returning from UK and you are an investor. You are coming here to India and you want to invest in the properties in India. You think after 10 years it is going to be growing, it's a growing market, and you find a person who will help you help you in buying a properties. So I'm just telling you the facts. Based on that, you can negotiate with that person. I want to listen how do you want to get remunerated for the work which you are going to do. You have an amount of, let's put around 100 crore rupee which you want to invest. You come here, you do all your market research. I want to invest 10% in Bombay, 10% in Ahmedabad, Chennai, Bangalore. So you come out with all your research. Where are these smart cities? These are the government regulations. So there is a water scarcity in these places, so you don't want to invest there because it's very difficult, then you will not be able to manage your business better. You look into all those factors, you come here, you find out a person. You say, these are the 10 things, these are my places. You go visit, check with authorities, can I start? That's the instruction, clear, and you tell him, for each location, this is the price I am allotting to you. If there is any increase or decrease, you come back to me. Don't take any decision. You have to discuss everything with me before taking any decision. Yeah. So these are the instructions which you are giving to them. Now, how do you want to be remunerated on those lines?
Am I going to do the investigation, find out the rates and also invest?
No. So the investor will be him, and he is going to provide the entire funding, and he has also done his technical study. He says that this is what you have to do. And anything, if you're deviating, you have to discuss with me before deviating. Let me take a call. You're not authorized to take any call.
So what am I exactly going to do?
So you will just visit the places, just see, yes, whether it is, what are the facts which he has mentioned, that there's a proper water facility there, there's a proper electricity, and the governments are ready to help you on that investment. You're just going and discussing with the authorities on those lines. So that's your nature of work.
I may put a percentage on the amount of investment which he wants to do here, and that will be decided by the time which I'm going to put to do the evaluation of his requirements.
Okay.
And it can be geographical also, depending on the places that he is going to select. The more important places I may place a higher percentage,
Okay.
and some other places it may be at a lower rate.
Yeah.
It will be mostly a percentage type of
Yeah.
request.
Do you agree with her on the percentage method? I'll just remind you that you have done your entire technical study. The money is yours. Do you want to share on percentage basis?
Actually, I like to know the exact location of that, and before fixing any price, I want to see that places, and maybe I want some more information from her about what is available.
Okay. No, so this is on the information front. So when you come to the conclusion, because you have to make a deal, that what is the amount which she is going to get, what is the remuneration which she is going to get. Without that, the deal cannot be signed. So I want to ask you whether you are okay with her proposal that she is asking for a percentage on your investment. Will you be ready to share?
It's any percentage.
It's actually
Okay. So let me tell you here, if you go on a percentage basis, say if I were being an investor, if you go on percentage, the amount was 100 crores, 5%, let me take 5 crore. She can put any person there and she can give you the report, right? 2%, whatever it is. What could you expect when you are paying on a percentage basis? What do you expect when you are telling someone to pay on a percentage basis? I'm not sure whether anyone have worked on any fee arrangement where it is based on success or outcome. So most of the chartered accountants who are practicing, they are not able to do that. You can't do that. But if you see from McKinsey, how do they work? They work, so if you see, they will go that I have to reduce my cost for the current year. They'll come out with a solution, and the fee, how does that gets compensated? It will be that whatever next 3 years profit which you are making because of my opinion, I needed 3% on that. When someone is saying that I need a 3%, you will expect I will pay you only if there's a profit, and only on the incremental profit. So in this case, when he has done all his research and is giving that data, unless he is able to negotiate a better price on the land or with the authorities, that how do I facilitate all those things, he is not going to pay you on that. In that case, what happens? If she is not able to negotiate that price, he says, yeah, I understand this is a 1 crore project which you are going to start here. If you can make me at 75 lakh, on 25 lakh I will pay you 3%. In that case, what happens? The efforts which she is going to spend to reduce that 25 lakh, it can be done in a day's time, or it can happen over a year. If it happens in a daytime, she will be like super profit. You will have a super profit in your account. But if it goes for a year, you spend your entire time, you may end up in losses. So that's where it's a basic knowledge where it comes in, like the risk. What is the risk which you are taking here? In this case, when you're going on a percentage basis, generally the risk, the person will be taking it up. He will be saying that I will be able to negotiate this price with you. I'll be able to do this. So that is one of the case. And if, let me put you other way. So I'm just negotiating with her. So ma'am, I will provide you this other location. And these are the 10 days which you have. You just visit all these places. You meet with this set of people. If you're not able to meet, that's fine with me. But you need to complete this in 10 days time. I'm ready to pay you all your out-of-pocket expenses. You can employ 2-3% with you for this work, so that they can also go on different cities. Whatever is their salary cost, whatever is their PF, whatever I have to require it from Indian perspective, I will pay it to you. And anyway, the amount is mine. The risk from your side, when I am seeing, is nothing, because I am investing it. Even it is loss, again it is up to me. You have to just go and discuss and let me know what is the final price. I will pay you on your cost plus 3%. Is it fine with you? Because there is no risk which you are taking it. I am paying you for all your 2 employees, full-time employees. I am taking care of all your expenses. There is no risk. You are ensured that you will get your 3%. There is nothing.
cost plus 3% will not work.
So how do you know that it is?
Because the cost involved will not be so much.
Yeah.
So the 3% return on that is not at all reasonable. I will look at what benefits you are getting and how much I can encash
So
on that.
if you see the benefits from my side, it is an investment of 100 crores which I have earned it over my years.
No, not the entire 100 crores, but the time which is required to invest that type of money in this country and reasonable returns which you will get, I would like to take a small cut out of it because I am also going to put in my expertise.
I am saying you have to go for 10 days and you have to just give me the report. I don't care whether it is loss or profit, it is up to me. I am just telling you, go and meet these people, you tell me what they say, that's it.
Maybe I just add up another 2% cost plus 5% I will tell and finish the deal.
The deal is done. The deal is done because she got satisfied only because of one reason, that there is no risk involved. I am assured, I have my assured profit of 5%. Whatever happens, whatever expenses I spend, I will be gaining 5%. Now what happens when you go and discuss this before the authorities? You will not have so many facts with you. Yeah, sure. Thank you so much. Thank you, sir. So you will not have so many facts that where is the risk, what is happening. So this is a simple example which I have given. So if when the business gets more and more complex, you have to dig into more facts, that who is undertaking what work and who is doing what business and who is undertaking all the risk. So that's where the question comes up. For example, if I say there is a subsidiary of CTS in India, anything happens, do you think whose reputation is at stake? Is it CTS India or CTS US? CTS India. So, okay, fine. Why is that so? Like, you know that it's a global company which has been from US.
Whatever happens in India, it's because of the Indian management of the slot.
Okay. So, but whose reputation is stake? If you see CTS India, okay, yeah, I understand that the local management of CTS India will be questioned, but will the global team will be happy with that? You know what happened in Nestle case? There was a ban on Maggi, and till that time, none of the people have flown from US or from any other location. The day the news was on, this was a flight which was booked at 12 o'clock and the global person were flying. So that was the reputation. If you see from the global companies, that's the major point which is there. Like, yeah, I have invested in India, but anything happens, my reputation is at stake, because the news flows to the other countries also that yes, this is not happening. Can I rely on this company? Whether the products made in India which are exported from here, does that have a lead content? Can I go and buy that? That was the reputation loss, right? And for you, CTS, on the CTS front, you are working and I am giving you an assured return. For example, what I discussed, 3% or 5% which I am giving you, and you made a blunder on the client report which goes out, you have got your 5%. Then I lost that client. Will you be ready to pay me the loss of that client? So in that case, you are not assuming any risk. So that's where all these three things function: the asset which you are maintaining it, and the risk which you are undertaking will lead to the characterization. So the characterization is whether I am a risk-taking person or I am a risk-averse person. I am not going to take any risk. My life is happy. I will do the work. A, B, C, you say. I will not go and see what is D. I will do A, B, C. You give me 4%. You do. There are other people who will say, I will do A, B, C, D, E, F, everything. I will also take risk. In that case, you should be ready to take losses also. So on that case, that determines your characterization, which is like you are risk taking or a risk averse, and this depends upon the facts. What are you doing? What are you really doing? There can be agreements which says that you are doing this, but what are you doing substance over form? That comes into place whether you are doing this thing on this front, and and asset, whether you hold any intellectual property. whether you have any intellectual property which is enabling you to get more clients, whether that is registered in India or not. So again, the question which I want to throw is that registration. Let me take a classic case of Maruti Suzuki. So let me take a case of Hero Honda, which is easier for me to explain on Hero Honda. So Hero was known in 1990s for, around 1985, they were known for making cycles. And the name of Hero was so famous that if you put on any cycle which is manufactured by local vendor, people used to trust. Yes, it is quality, it will withstand test of time, it will be there. Honda was coming up with a technology to manufacture 4-stroke engines, and they have sensed that India is growing. There were talks which were going in 96-87 on the Congress government front that we have to liberalize, our cash reserve is not good, so we have to ensure that we get enough foreign exchange inflow. So Honda guy was thinking on his mind that yes, I have to invest in India, and I see that the growth rate of India in the next 20 years is going to be like on a higher side, and I have to invest there. So Honda comes to a Hero guy at that point of time, and he says that I have a technology, you have a name. So let us get into an agreement that I will give you you give me the market access to India, and I will provide you the technology, how to manufacture this. And the deal started with a ratio of Honda guy asking for 90, that whatever profit which you are going to make 90, even if it is loss, I will take up the 90%, and even if it is, and 10% to you. Hero, the guy from Hero, he was very smart enough, and the deal was finally framed at 50-50. He said, I am giving you market access to this. Let me put you one case. You are providing me a technology. What is the cost of your development? You have already developed the technology, so this is your cost. I will pay you over a period of 10 years. On that, I will give you a return risk-free return on that, on your cost which has been borne. At 4%, I will pay you whatever profit arising in India is for me, because I am giving a market access to you. So that way the risk was fluctuating. He was saying that you provide me technology, you have done your development, it is done. I am going to pay you for your development. I know how to sell in India, I can sell it. Then the guy from Honda says that I can go and sell this technology to anyone. Hero says you can sell it, but the brand name which I have, you can't command from any other people. You will not be able to sell a single thing. So that's where, so here what happened, there is at the final the end that profit and loss will be shared in equal ratio, and that's how the deal was signed. And after 20 years, what we are seeing is that they got demerged because Honda got its own name. Now he is sure that he can still sell in the Indian market, even without having a Hero name. From a Hero perspective, if you see, he has trained his employees over 20 years that how to manufacture it, and he can survive without Honda. He knows how the technology works, and he can manufacture on its own. So if you see whatever the developments which has happened globally has happened through the investment and through this kind of deal. At the start it could be like on this ratio, and over a period this turns out that both get demerged and you become independent. This is how it happens. And this is also majorly also the political environment should also support that on those lines. So the major fact here is when you go to authorities with this kind of arrangement, that way you say that this is how my profit has been, I will pay 50, I will retain 50%, I will pay 50%. The question will come up, how did you come into this? So the facts are very simple, that you say these are the things which I have taken care. I have find out what is the royalty, what is the immortem period, how much years should I, how much year I will make a break-even point. right? Is that anything which requires a knowledge? I think you do this on daily basis. Okay, let me give you an example. If you want to travel from here to any place, don't you see what is the price in Ola and Uber? You compare and you come to conclusion. So you do transfer pricing on your daily basis. Well, it's just that when it comes into business, it gets more complex. It gets more complex. You see 5 years down the line, you see 10 years down the line. In your life, you sometimes see 3 years down the line, or you see on the immediate basis what is happening. So all those things which gets tied to your function, asset and risk which you are taking it, and what is my characterization. So if you see the arm's length principle, which is your remuneration, requires that compensation for any intercompany transaction conform to the level that could have applied the transaction take place between unrelated parties and all other factors remaining the same. So the question here comes up when it is a related party transaction. Why I am saying is that when it is a related party transaction, when there is any agreement between father and son, there is always a fiduciary influence that you can command over the other person. So you can command over the other person. So if it was a third party, you will not agree to it. So you will say, I don't agree to it. This is what I want and this is what I can give it to you as a profit, or however what is the remuneration mechanism which goes on. So, and in related party there is always it's not always it is the fact that you command great control over your subsidiaries. Any company which is getting started in India and the head office in any other country will command more more control. For example, India TVS, if they are going to start any subsidiary in Sri Lanka, Ashok Leyland already has a subsidiary in Sri Lanka. If you want to say like, okay, I am starting there, will you not be in a control to tell them this is what I will pay you? It's your own subsidiary. So that's where they say that. And why is this question coming up, that when it is cross-border, these questions are so much. When it is between India, the question is not so much. Go back to the centuries where you see the most important thing, until there is a country's border, transfer pricing is going to remain. The most important thing which cannot be recreated are natural resources. One is the land, one is your labor and your capital and this thing. So you are coming to India, you are using the skill set of my people, you are using the land of my country. Am I being remunerated properly for that? So that's what it becomes more important when it is a cross-border transaction. So that is why, like, if you see on all cross-border transactions, there are so many regulations. And how do you compare it? You can compare it like India is making so much profit. I want to compare it what Infosys is making. Because Infosys will have all transactions with third parties in US, and they will be remunerated on that lines. So you want to compare it. So that's where the benchmarking comes into question, that I benchmark what my competitors are doing. Whether they are controlled or uncontrolled is the next question. If they are controlled, then there is no use of comparing with them, because it is already a controlled profit. You don't want to compare something with which is already controlled. You will compare with what happens in an uncontrolled environment. So that's what the line unrelated parties, and how do you do at the uncontrolled environments. So all this function, asset, risk, characterization, uncontrolled environment, that's where you characterize it. So this, the definition looks very simple, but there are so many facts which goes behind on this line. So the next slide is on that. So I've explained you on function, assert and characterization. Any doubts till this? That you can ask me from anyone working from any industry that how do you go about this industry? Anyone from pharma industry here who's working on pharma industry, who have pharma clients? Anyone? Now I'm not going to question. I'm going to just say what I have done in pharma. No one? Okay, if you see from pharma industry, let me put you there on the pharma industry. The drug regulation of FDI, which requires you have to file your drug there, and you get a period because you are find out first that this drug can can cure this disease, which I have done it for the first time. You get a period of 1 year that I'll be the only sole seller in this market, right? So there are two rights which is being offered at that point of time, and you have to prove that this is efficient, this drug, based on all your statistical analysis, null hypothesis, which we have read in our SFM long time back. So you do that exercise and you come out with the results that this is how we have come. And there is a manufacturing right where you manufacture at one place and where you market at one place. If you see, most of the rights which India has till date is on the manufacturing rights, not on the marketing rights. So most of the companies which are in India will be manufacturing the product and will be selling back to US. The same product comes back here on the marketing front. If you see from manufacturing, what happens? I will tell you manufacture this many goods, I will give you a constant return. Let me take the headache of marketing. Because if you see on the phases of industry, you will see the most important thing is who files the application first. Because your competitors will also be doing the R&D on that drug. And if you miss by a month, you lose the profit of 1 year which you are going to make. That will be a super profit. You can fix whatever price you can fix. After 1 year, it becomes a generic drug. The molecules are out. Any competitor can provide it, and you will slash that price. It's simple as that. I have made my profit. Now I will not let any other person to make that profit. You will reduce the, after 1 year, if you see the drug price will come down so drastically that you will reduce price so much that the other company cannot manufacture it. So this is on pharma industry, which the insight. So in this case, why I was explaining on this tested party, the example which we had here, and where I was saying that I will pay you 3%. So we both are related. Let us say that we both are related, and I say I will pay you 3%. Whose financial results do you want to test? I am making 50% profit on this business arrangement, and she is making 3% profit. What is the least complex person is here? Which the financial statements which you can see and you can rely, yes, I know for this 3%, for this function 3%. Who is the least complex? And that example which we were discussing here. 3%. So that's where you call it as tested party. So the tested party concept is that who is the least function, who is bearing the less risk? Because you can easily go through their financials and you can easily get into the facts. You know that it's a least complex, I can rely on that financials. If you see it from my point of view, I will be the most complex entity there. For earning this 100 crores, I could have done so much of R&D or I don't know how I made that money. I could have done, and I'm taking entire risk. I can stand to lose that 100 crores. I could have developed some IP which could be costing like anything. So that's where you go for a tested party which is very least complex on that. So this is the concept of tested party. Then you get into the method. So you start with the function, you start with characterization, you start with tested party, okay, who is the least complex, then the remuneration, under which method you want to do it. That depends upon the comparables. How do you find out that comparables is the methodology, that how do you go about it. So one more classic case on the Lee firm, which was a sourcing thing. What happened is, they were exporting some of the materials from India to across global, and Lee Feng has a office outside India. And they used to tell them that you go there and please go and visit all these suppliers, and this is the price which I am giving you, 100 to 200 per product. You go and tell me what price they say, I will give you back. I will, whatever your employees which you are having for these people. So they had a strength of 1,000 employees who are working for them. They said, for your 1,000 employees salary cost, whatever is the travel cost, I will reimburse, I will give you entire cost plus 5% or 10%, whatever you want, I will pay you. So for those 1,000 employees, the cost per month was just turning around to be like around 10 crores. I'm just giving you a vague figure. But the amount of exports which were they made from the suppliers which was going out because of the things which they were doing was around 12,000 crores. So this got the TPO went into more details. He said the worth of exports which is going is 12,000 crores, whereas your cost is 10 crores, I agree. And so why is that you are remunerated on cost plus 5%? Why don't I, on the 12,000 crores, how much is the cost which you have negotiated? Because your price band was from 200 to 100. If you have brought per product price from 200 to 150, you have benefited your group for 50 rupees. And in case of any unrelated party, you could have asked that on that 50 rupees I need some commission. So on that 12,000 crores, I could require 5% commission. That's what the officer has said, that I want 5%. Unless you have documented that negotiation has been done by the group based on the mail communication, you have to get into that details. You have to prove that yes, they were doing. You have to document all your minutes of the meeting, call records that yes, they were negotiating. You will not be able to prove that who was the risk-taking entity here. So the facts become so important. From 10 crore, your adjustment can go up to 12,000 crores on that 5 or 10%, which could be 1,000 crores, which could be more than your revenue. So that's how the facts are so important, which I will be repeating this word again and again so that it gets that on transfer pricing the most important thing is facts. How do you document it? And you have to prove it. It is not just documenting it. You can write English, anyone can write, but you have to prove it. That's where the real challenges come, and that's where the chartered accountancy starts. That you are aware that anything, any decision on related party, if someone is related.
How to refute TPO when there are no comparable transactions?
So in which case have you faced that? Because if you ask me, there are comparables. If you ask me on those lines, and there are various adjustments which you can do if you are not able to find out comparables. So I will come into on those lines. So this is then on the TP methodology where I will come to the point where if there are no comparables, how do you go about it? So these are various types of business model which you will find across globe, that how everyone functions. Either it's a manufacturer, is a distributor, or is a service provider. Toll manufacturer is simple, that you will hold goods for someone. Just for 2 days you will have it, then you will transfer it. There is no risk. So this, if you see, as a toll manufacturer, contract manufacturer, licensed full-fledged manufacturer, who will be taking the more risk? Full-fledged manufacturer. And the least one could be? I need not teach transfer pricing, you have learnt it. So that's how the risk and rewards are there. Everything is based on facts. You decide, this is my characterization, I am on this line, and this is how your risk table and your rewards will be. So the moment you increase your all those same function, asset, risk, you will have more profit. The moment you don't have that, you will be, your profit will be limited because you're not taking any risk. So these are the business models. If you want, you can go through once more, and if you have any doubts, I can explain this business model again. Or any specific example which you want.
You can talk about these different types of manufacturers.
different types.
The characteristics of say a toll vis-a-vis a licensed.
So if you see a toll manufacturer, let me, for example, I will give you a material, or you give a material to any cobbler and you say this is the material, you manufacture it, after 2 days you are returning back me all the materials which is left out. Will he have the title to that goods? The title is he will be having that title as a flash title. He will be holding it only for 2 days, maximum.
Something like job answer.
It's kind of a job work, yeah. Then you come to contract manufacturing. In case of contract manufacturing and toll manufacturing, the only difference is that you hold goods for some time. I will tell you, you manufacture this goods, I will tell you when it has to be sold. In that case, your remuneration, your risk is little bit increasing, that you have to manage your inventory. You will be having a carrying cost. You have to manage the obsolescence of that material. You have to build a warehouse accordingly, whether it is perishable or non-perishable, how do you maintain that? So you take an extra risk on inventory management. So that's what is contract manufacturing. And if you see in contract manufacturing, okay, I will ask you what is the important thing in contract manufacturing. License manufacturing, classic case of Honda. Honda as a subsidiary in India. They have given the technology that this is how you have to manufacture to Honda India subsidiary. For that license, I will tell that I will pay you for your license cost. Balance marketing I will do. I know how it has to be done in India. So you just license the technology. So on any third party sales, you have to pay me a royalty there. I just license that this is my this thing and you have to pay. It is not only if you overseas, you can have this contract in India also. So this is on license manufacture. Then full-fledged manufacture where you develop your own technology, you invest in R&D, all India outbounds, Tata Motors, they develop their own technology, which is there. Maruti, they are developing their own technology. And all big houses like Suguna, which is also outbound from Coimbatore, TVS Motors from South. So that is full-fledged manufacture. They can turn into losses or they can have a huge profit because they are taking entire risk. So this is the major characterization here. So here the major question on contract manufacturing, I just want you to think through. If I am telling you guys you have to manufacture this many goods for me for the entire year, and I say that you are a contract manufacturer, you have to manufacture only for me. I am giving you the technology and you have to sell it back only to me. You are not authorized to sell it to anyone. As a CFO or CEO of that company, what do you want to have? What is the clause which you want to have in the contract manufacturing setup? That okay, I agree, I will do the entire business for you, but these are the 2 or 3 clauses which is very important for me. Without that, I will not.
My fixed cost should get
Minimum?
profit. My fixed cost should get.
So you want to have a capacity utilization clause. That even if I have set up my factory only for you, and if you are not giving me a confirmed order, at least give me my fixed cost. At least you have to reimburse my fixed cost, because you are restricting me so much that I can't sell it to others. Yeah, good one. And the other one, you want an assured profit, because you can't go and find out any other customer because you are restricted. You are saying that you have to only sell it to me. So that's the, if you see, when you go through all this, so now you know the characterization and you know what is the right question to ask with your clients, or if you're working in that company. If someone says, no, we are just a contract manufacturer. Okay, we are contract manufacturer. Is our fixed cost recovered? Because I am just being here only for him, not for any other person. I am just being here. So, anything on distribution? Then I will ask, I would like to learn what is low risk and normal risk and super. So what is the difference which you can say between normal distributor and super distributor?
Advertisement cost.
Yeah, right. So which company do you think will be on those lines?
FMCG.
Yes, FMCGs. Right. So for example, if you want to brand some product in India and you are taking all the advertisement expenditure, you are taking entire expenditure there, and you say that, yeah, I am buying your products, I am not manufacturing it, but how do I market in India? What should be the labeling which I will decide it, and I know how to run the marketing campaign. So in that case, you will say whatever you have manufactured for me, for India, I will pay you the return. Whatever it will. In that case, what does the other entity becomes? When you tell him that this year this is the marketing spend, this is my sales forecast, I need this much quantity. What is the other entity?
Manufacturing.
Yeah. Who is the least complex there? In this arrangement where you are in a... Yeah.
Rather part.
So it is not that least complex will always be in India. It can be outside India. So that's where you come to know, based on function, you have come to a conclusion very on a right lines that yes, the other person becomes a contract manufacturer and you become a super distributor. You will have the more profit which will be lying in India. Anything on service provider? So if manufacturer and service provider go in line and line, like captive, low risk, entrepreneur. Okay.
Captive means only working for one person.
Yeah. Captive, I don't want to, in transfer pricing there is, you can't restrict anything to one thought process. You can be captive for 10 entities. And you could have agreed that you will ensure me that my 10% of capacity is utilized. If you are not giving me 10%, you will reimburse me for that 10. So for each transaction, the characterization can be different. So if you see our act, which says that you have to do the analysis on transaction by transaction basis. So if you see, like you get into an agreement with one company that 50%, he says that 50% of capacity will be utilized by me. Rather 50% you find out, you do whatever you want to do. In that case, for that 50%, you are a captive. But for the other 50%, you are an entrepreneur. So that 50% you have to then justify. The same way, the risk and rewards for the distribution model. For the sourcing model, again, so I have explained buy and sell as a distributor, commission where you work on 5%, service fee, cost plus 5 or cost plus 10% where you don't take any risk. And this is, you can go through, I think the risk, these are the functions which have been performed as a service provider, low risk, captive. So as a captive, you will be not doing any R&D because it doesn't bother you. You say that I will manufacture what he says, why should I invest in R&D? So these are the indicative parameters which you can look into, that when you go for any client meeting, that what is his real characterization, how does he functions on the transfer pricing. Any doubts on this?
Can you elaborate on the foreign exchange?
Foreign exchange risk. Yeah. For example, captive service provider. Let me take you a Coimbatore belt example. So Coimbatore is famous for manufacturing cotton clothes on the cotton front. And I tell you that you have, this is the product which I want, and my product is of little importance, I mean little high quality. If you see in European region, just I will take example of some bandages which have been manufactured in Coimbatore, which are only exported, which is not for the Indian market. The quality of the yarns which is used in manufacturing the bandages is of very high quality, and which you don't find it from Indian vendors. You have to go for that to Indonesia or to the Sri Lanka, where the yarns are very good and the cottons are of high quality. And you say that this is the, I need a 10,000 quantity of that product, of a category this. Then as a contract manufacturer, now I'm just putting you on the spot on that thing. You are a CFO of that contract manufacturer, right? You know that your purchase is going to be most of imports. You are not going to get anything from Indian vendors. What do you want to have in your agreement clause? Don't you want to cover your foreign exchange risk? You could like that, okay, I will export, but I am not sure how foreign exchange movement is going to move. If it is within 1 or 2% clause, I am ready to bear that cost alone. But if it is going to be more than 3 or 4%, I will come back to you for price negotiation. Won't you do that in unrelated party transaction? If you are going to do that with a third party, you are going to make sure that this clause is there. Construction contracts, don't you have that clause, escalation clause? It can be for any reason. So that's what, as a captive service provider, he has to be, he should not, as a characterization, based on facts what he is doing, I don't want to characterize any entity whatever it is. For a period of 2 months he can be a captive. For a period of next 4 months he can think that I want to move up the ladder, I will take risk and I want to have more profit. So you have to document what he was doing at that point of time with all the evidences. So that's all those facts, then you come back to this points and then you see, okay, what is he doing, whether he is taking that risk, you characterize it accordingly. So don't start any meeting with the client that this is what, just you need to understand what they do. So what is the risk which they are facing? Are they taking any risk, or is it being entirely borne by someone, or they are bearing that risk? Got clear on the foreign exchanges?
Your foreign exchange will be a risk only if I am compelled by my customer to.
Yeah, so he is asking you that you have to get this quality, and you are sure that Indian vendors are not able to manufacture that quantity because it is not available in India. It is not the question on the competency. It is on the availability of that natural resource. Whether
It's
you
my business call, whether I want to procure a substandard quantity
Yeah.
or whether I want to.
So it's from the customer end. Your customer is he wants the same goods. Then you are forced to buy that material. So then you want to adjust that pricing there. You want to transfer that risk to him. So if you are not going to transfer that risk, if you are just taking the foreign exchange risk alone, how do you want to agree then? So you want to say that, okay, foreign exchanges, I don't say that it is a big risk. If I am negotiating with you that foreign exchange will not be a big matter, what do you want to say? You will say, okay, fine, 1% I will bear it. If it is more than that, you have to reimburse me. As you are mentioning that it is not a big risk, then let's put that into the agreement. As a third party, will you not argue on those lines? When you are so sure that it is not a big risk, just put into the agreement, more than 1% you will pay me, I am okay. So that's where it's more fact specific. It's not like you go with the mindset, yes, he is a contract, he should have this clause. You understand whether he is taking that risk. If he is taking that risk, then that transaction is not a contract manufacturer, then he has to move up the ladder. For that foreign exchanges, he has to earn more. So in that case, foreign exchange loss, if you are incurring a huge loss on that, while making payment, you agree that I will pay the vendors after 6 months. When you are accounting in your books, it is on a higher, it is on a lower price. When you pay it, there is a loss. And if you have not agreed before, will the customer pay you? I say no, but it is done. Now you have to bear it. Then what are you actually doing? You are moving up the ladder. So in that case, your pricing should be in such a way that whatever happens, you want to recover that amount. Have you taken care of that? Have you done that? Or if someone is controlling you and who has not told you that you have to do this, then it means you are controlled. Hence, I will compare with uncontrolled transaction. So that's where the TP starts. In related party, you will say, these are the things, you just sign the agreement and give it back to me. Have you done this? In unrelated party, you would have thought all those things. So that's where, for each risk, you have to see whether I am being remunerated properly or not. If I am risk averse, I am risk averse. If I am taking risk, I need more profit. I should be remunerated more. And if you are remunerated more, you should be ready to bear the losses also.
What is significant people function?
On manpower,
No, the second one, significant people.
significant people function. Okay. It's based on industry. So how many? What client do you like to? Which industry do you want me to help you on that?
Say a call center.
Huh?
Say a call center.
Okay. So call center. What is the most important point on a call center? Time to respond. If someone picks calls, you have a toll-free number where you starts with 1800, you call 1, 2, 3, then it takes 15 minutes to reach there. What is the customer? He expects that he wants an immediate response to it. How does he get an immediate response in this world right now? What he should have?
Response should be.
So response is one, but behind that there are so much things which have gone through.
Kind of a technology or what are the stages?
So you should have a technology to respond very quickly on that, and the technology should be in such a way that across globe, any customer across globe, if he calls, the response should be on a similar lines. You can't have 2 or 3 responses according to country wise on your products at least. And that technology, if you see, the people will be trained across globe because they don't want to train people every year on a new platform. You could have developed that platform across globe, a single platform, which you provide training only at the initial stage. Then it is up to team to train the new employees. So the most important in the call center is the software and platform, which they have. And who is maintaining that? Who is responsible for maintaining or upgrading that software? Are they sitting in India? Are they doing that significant function? So in that case, in that industry, the important person is the IT head, who is developing that software or maintaining that software. Who is doing that? If he is doing the significant function there, it means he is helping other subsidiaries or across the globe to develop such a kind of software which is common across platform, which is helping them. So in that case, where is the significant key function is happening? So that's how you see the significant key function. If you see from pharma industry, it could be the R&D head.
Why do you use the word people?
So people in sense, who is the decision maker? That's what I'm trying to say. On the decision maker, like a significant key function. It's okay. On Apple.
People who are attending the calls, they may be just doing a routine function.
Yes.
But the people who are handling the IT infrastructure, they actually comprise the core.
There are 2 things. One is handling maintenance. One is developing and upgrading it. So if you see from the IT industry point of view, the major function if you see on any software development is requirement analysis. Who does the requirement analysis? Discussing with the customer, and then they frame that on what platform I need to prepare this software. Either I need to prepare it on open source, or I have to use my proprietary software, or I need to use Linux, which is like very coded, very difficult to code it. So who are those people? Those people, maybe for example in India there could be thousands of employees working on it. But who is going and discussing with the client, this is my requirement? Who is undertaking those functions? In the entire value chain, if you see, the requirement analysis takes a major chunk of the work. And deciding that this is the platform, then it starts execution. So who are the decision makers, who decides what has to be done, and what is the execution which is happening? So that's where I'm saying significant people function is on those lines, where it is dependent on the transaction also and dependent on the industry also. So that's where I'm like, it's more fact specific, it's more industry related rather than tax. You need to know the industry very well, that what is happening in that industry. So one of my colleague was, just recently they have released a video on that. Just I'm giving you an example. Before Flipkart coming here in India, Flipkart before starting, the role of sellers, the distributors, and the role today which they have, is there not any change?
There's a sea change.
Hmm?
There's a sea change.
So that's what, where is the significant, the function happening that can change according to the industry also. So at what time, what is happening, there can be a drastic change and things can move around. Your entire model can be flipped. Anything else, sir? On the development front, so I will just take you through on the development front, and then I will leave the session another half an hour for your Q&A session. You can raise a query on any industry front, how do I handle this, and before going into the developments, let me put you through the most of the transactions which are getting challenged by the tax authorities will be on the management charges or on the royalty. Okay. Here you need to know that why are those things being challenged. So why is that management thing is more challenged than the sale transaction?
We can even otherwise manage the affairs on our own. So why do you have to pay management charges?
Okay.
The process of determining the cost of a product is much more easier than for a service. So in this case, you can't justify the cost behind the management. You can't monetarily determine the value addition because of the service as easily when you can do it for a product.
Okay. Yeah, good one. So, and on the, if you see on management charges and this one, royalty is questioned more, because on sales, whatever the sales which you are making it, you are going to anyway pay the taxes on it. So there is a perception on behind that is the management charges which is paid cross border is just to evade dividend distribution tax, because you withhold 10% and you save 20.92% on that, and then again you claim 30% deduction on that. So that's where it is more questioned, because on sales it is very clear that you have to pay the, here you are just siphoning off the profit. So that's where again the facts are very important. On the management charges, why do I need that service? Is a duplication of service. For example, a company like a CTS who will have like a 40 chartered accountants working, do they really need from headquarters an accountant services? Can't they prepare their own financial statements? So that's why it starts. The question in the management charges is that Is it really required? Is it duplicative in nature? I am also doing, he is also doing, I am paying it. As a third party, you will not pay for duplication services. You will say, I have my own in-house team, let me manage it. I will not be paying to any consultants. Third is shareholder services, where a group is inviting all its shareholders. It's an AGM which is happening. I mean, CTS AGM is happening in US. Do you want to bear the cost of that? Why?
That is a part of my concept.
And even if you don't bear it, it is statutory requirement which he has to do. As a shareholder, he has to do all those functions. He has to do all those activities. So that's what you have to, whatever the management charges or royalty lies on this three condition, where you have to see whether I have a need, whether there's a duplication, whether it is a shareholder activity. If these three are there, then you will be question 2. I mean, it will clearly show that it is just you are taking out the money, you are actually not requiring those services. If you have, like, yes, it was needed, if my group is not going to provide me, I could have got this from third party. It is not that I don't wanted these services. On the benefit front, there are numerous case laws which are in the favor of taxpayers, which says that it is prerogative to the assessee. He can take a call what service he requires. Whether it is benefited or not, that you are not here to judge it. It is a businessman call. I am going to do this investment, whether it is going to be profitable or not. You can't tell me that you invest here. You can't run my businesses. I mean, the tax authorities cannot run the business of the assessee. It is up to him whether he requires that service, whether he is getting the benefit or not. It's not. So it is only the need is which is questioned that on those lines whether. And if you see also one more stats, if you see all ITAT cases on the tribunal, around 80 to 85% cases are in the favor of assessee. Only 15% cases are in the favor of because it requires so much factual thing, and tribunal is the final fact finding authority. Over the period, you will be able to defend. I mean, you will bring in more facts and you will be able to explain better. And I'm not sure, because this should not be the practice, because what happens is in this thing is you increase your GDP. Whatever the adjustment which is being proposed is added to your accrued income, which goes to your GDP computation and income. After 3 years, it goes down. And every year, this is the cycle. You may see that this is the tax demand which is being raised. This is the income which we have raised during the year, in which the 65% is majorly from transfer pricing. On that 65% is only 15 to 20% which you are going to collect it after 3 years, because 85% of the cases are turned down. So now the cases, that's what, there was a recent development which happened 2 years back, and I am not saying that it is the fault of tax authorities or it is fault of the SSE. Let me get into more facts on those details. When you go and represent before the transfer pricing officer, most of them may be from the background of science and not from the tax front, or they will not be able to appreciate it. For example, if someone has studied microbiology and he has joined tax office, you go and explain him IT. Will you be able to appreciate what platform is, what Linux is, what open source is, what Java is, what is coding, how do you do coding? So the expertise is on a lower side. When it started in 2001-2, which audit cycle started for transfer pricing. It was on an increasing trend like anything, and every officer used to get 200 files. And he has to come to a conclusion for 200 files in a 1 year's time. 200 files, he has to read all the documents, transfer pricing documentation, which can be this big, around 200 pages, because you're explaining your business. You're telling this is what comparables are doing. He has to read a 200-page report of 200 clients. He has to give an opportunity of being heard. He has to call around 2-3 hearings. He can't complete in one hearing, because the moment you complete in one hearing, you will say there is no natural justice. I was not given proper opportunity of being heard. And you don't have the skill set to appreciate what is happening in that industry, because you are from a different background. And you don't have a time frame for that, and it is mandated by law that you have to complete by this time. Then you have to issue a show cause notice, which is mandatory. Before you are saying that it is not at arm's length, you have to issue that. Then you have to wait for a month's time for him to respond, because you have to see that also, no, that the other person gets the time. Then he has to pass the order, and from that there's a pressure from the CBDT that you have to close your case soon. There is an audit which happens on the cases which he has done. He has to collate facts. He has to. Do you think anybody in this room can read 200 companies, what they are doing, what is globally happening, what is happening in industry, and can come to a proper conclusion? So that was the thing which was happening. So I'm not saying that it is fault on. There's no fault on anyone's side, because there was no time which was given also to the tax officers. So that has changed. Now they have started that every officer will not get more than 50 cases, and they will have juniors for that, and they will concentrate only on that 50 cases based on the risk parameters, that this is the risk. We feel that these are the clients where there can be some risk on from transfer pricing perspective, and you will see only 50 cases. They have reduced that. So India is also going on a global front where in the future you will see most of the cases on transfer pricing will be a joint audit. Because if you see, I am disallowing the expenditure from here. I am saying, no, your sales should have been so much, which is an expenditure on the other side. He could have claimed the expenditure for the, for him, the sales, for me it is an expenditure, or vice versa. The other counterparty could have already filed the return of income in this country, and now you are increasing the adjustment amount. Will he be able to claim that extra? Because the time frame has already gone through. So there is he's paying taxes on the same thing twice. So that's what OECD has recommended when there are so many cases pending on one issues, on management or royalty, or with one country it is on huge lines. It is better that you go for a joint audit, so that it is an expenditure on income. So both parties should be benefiting out of it. He should be able to claim the excess adjustment which is going on. So this is on the front on the what happens in the transfer pricing officer, that they don't get so much time, and this is what happens there, and that's what the cases goes back there, and again it comes back down. And so to evade all this, they have started you have to have only so many cases, and the forums which are available with the SSE. One is you have to go through the transfer pricing rule. Before the transfer pricing officer, you have to explain your facts. After that, there are two ways which you can go. One is the dispute resolution forum, and you can go with the Commissioner of Income Tax. And the dispute resolution forum, the plus point is that you can go and appeal against the draft order. Before the draft order, there are two, one is the draft order, there's a final order. And if you want to go against, on basis of draft order, that you go for a DRP. You go for a dispute resolution forum, which is this member of the same commissioner, 3-bench member is being formed, and you are being called for a hearing. Why do you think that people will go for a DRP rather than Commissioner of Income Tax Appeals? Yeah. So because it is based on draft order, the demand is not materialized. It is based on draft.
How to examine the counterparty abroad? How people will examine, sir?
Which one?
See, he has issued summons for eliciting some facts.
No, I am not getting your point, sir.
You want just asserting some facts
Hmm.
to the party abroad,
Hmm.
the company abroad, the personnel abroad. How will you do that? Video conferencing is how?
Video conferencing is, they haven't started that, but it is there. If they want, they can do it, because we have signed an exchange of information. We have signed an MLI with 97 countries. With 70. We have signed an MLI where it allows that exchange of information can be there, which has been signed in the last year, where you can exchange information. So,
As of now, it's not there.
huh?
As of now, it's not there.
As of it is there. So MLI, the MLA agreement which has been signed, even if you don't have a DTA under Section 90, you can still go ahead and file, you can get the benefit of mutual agreement. So instead of getting into an agreement with each country and changing clauses, so this was creating an issue entire globally. So what they have come up with, the OECD, they said that we'll frame one standard agreement where each country will come and sign, and the signatories to that countries, they can exchange information, they will abide by this. Instead of you going with every country and signing it off. So this is the common template, this is what this, do you agree? If India agrees and some other countries agree, it has become a global mandate. So I was on a dispute resolution forum. So you go, if you, the tax, you need not pay a tax demand. And one more point is that you have to complete the proceedings. There is a time frame. They have to complete within the 9 months of filing the appeal. Whereas in the Commission of Income Tax Appeals, there is no time limit as of now. But the cases gets resolved in 2 to 3 years. That's the time which they take. After DRP and from DRP and CIT, these are the two routes. Then you move up to ITAT. So this is the traditional mechanism which they have, and the other new forums which are there is like MAP, Mutual Agreement Procedure, Advanced Pricing Agreement, APA, Safe Harbor. For example, if you are a software company, there is a rate which has been already prescribed that if you are less than 100 crores, if you are less than 200 crores, if you are maintaining 17%, it's fine. You need not come and prove that other companies are also making 17%, I am also making 17%. You have to just prove the facts that you are a captive service provider. You have to prove that yes, I don't take any risk, hence I am remunerated 17%. So that 17% is fixed, which gives certainty to the companies. So they need not worry, okay, how much profit should I make every year? Will it be fine from transfer pricing point of view? So that's where Safe Harbor was brought to get certainty. So these are least complex, where you can go and agree at 17% for, if you want certainty in life, you have to give up something. You can't get certainty at a lower cost. At any point in your life, you will not get a certainty at lower cost. You have to pay for it. So that's where, like, if you see, industry could be at 15-16%. You will pay 1% extra to have that mind relax and you concentrate on your business. So that is on Safe Harbor. On APA, you go for more complex transaction, where the business is more complex. So the biggest point of APA, which was there already available globally, and it has also brought into India in 2013, that you can file an APA and you can say next 5 years this will be my business, and this is what my business will be, and I am going to do these things. You tell me what rate should I be, what should be the margin which I should maintain, or what should be what you can agree on that specific transaction or all transaction put together. You can go and agree. You have you can agree for 5 years. That agreement can come to a conclusion in a year's time, or it can take a 3 years time. Generally, the average time in India is right now 38 months, and India could have signed more than 100 APs on this front. So where they know that for next 5 years I have to maintain this profitability. So there is no question from transfer pricing officer. It will be just a compliance audit where they will see that you have agreed for these 10 things in the agreement. Have you done these 10 things? Have you maintained these 10 things? So that is what you have to prove. So there is no number game which will come into place. That is on one front. On the APA front, MAP is the same officer, the competent authority of India, will go and discuss with the competent authority of other country. So it is a closed door negotiation.
Domestic activities.
No, it is not domestic. What I am saying is, there are two kinds of APA. One is unilateral. You agree only for my pricing. I am going to sell to to overseas related party at this price. You agree and you say, I am fine with unilateral. And bilateral is that you agree from both competent authorities. From both. So what is happening is that when you AP you go for the next 5 years and you have a provision for going back for previous 4 years. So you can agree for the previous 4 years also. That previous 4 years I have worked out at this price. Can you tell me what should be the price I should maintain? On mutual agreement procedure, this procedure was there even before APA came into place. So this was like you can file a letter with the counterpart there. Can you come and discuss with my competent authority? This is the pricing. So they both will negotiate and you will be given an option whether you agree with that or not. If you agree with that, it is binding on the Indian authorities that they have to. And if you are not agreeing, then you have your traditional route. You can go back to ITAT again. So if you see MAP and bilateral APA, both are on similar line because the competent authority of this country will discuss with the competent of that person, that country. When do you go for a MAP is for a cases before 2013 which is still pending. You have a 4 years time frame. You go and apply for MAP and you want to have a certainty there. And most people for MAP, for bilateral APA, you have to get the competent authority of that country to come over here and discuss. Whereas for MAP cases, what happens is that they discuss on sector wise. So once in a 2 years, they come here and they discuss for this block of years. For financial year F5 to F5 9-10, let us agree this should be the price and let's close the case. But for when you file an APA, it has to be case specific. You will discuss on a case specific basis. It is not an industry problem. It is your own business complex problem where you want a solution. So that's where you choose which route I have to choose. So before choosing, providing any guidance to client, we have to see which is the merit route for the client, whether he should go for this or whether he should go for this. So it depends upon the client that what is his problem, whether it is a complex or it is a simpler one, how he wants to go about it. And all the problems are only from the perception of client. We may think it is a complex, for him it may be a simpler problem. So these are the traditional routes which we have, the traditional routes and the forums which we have to mitigate all this transfer pricing issues on the front. And so the development front, if I want to go on the development front, so country by country reporting. So CBCR, it's an interesting thing which is flowing. So what happened in like 3 years back, there was huge cry among the global forum that there are some countries where I am paying it as a management charge and he is accounting it as a dividend income. So you claim 30% deduction there and dividend income is exempted there. So there is double avoidance. Second, you say the R&D people are sitting there. Most of my business, most of my profits, all decision they are taking. They are a huge group. They do everything, I do nothing. As Sir was saying, how do Indian transfer pricing officers know that? If you are going to ask, and if Indian transfer pricing is going to ask your subsidiary, can you provide me what is your global revenue, how many employees are there, what are their skill set? You will respond very simply. It is nothing to do with that. You find out whether I am at arm's length or not. You will not get the entire picture of group what is happening. So all the countries came together and they said there should be rules, something which has to be framed, and there should be data points which has to be provided by all the companies exceeding the turnover. So it has been set as 5,500 crores in India, which is also in line with 750 million euro dollars globally, that they have to provide details. So if you see on those details, so there are three things which they have to maintain. One is CBCR, which is country by country reporting. One is a master file. There is a local file. So local file will be based on the local regulation. For example, for Indian thing, it will be based on Rule 10D and 92, Section 92 of transfer pricing. So they have to maintain that according to master file, according to OECD framework which they have provided, and also India has come up. And if you see from OECD and Indian regulation, there are 5 differences. So India wants additional details on those front. And there is CBCR. If you see the country by country report, it is more a quantitative, where you mention this is my global revenue, these are my subsidiaries, these are the key people, these are the people who are working here, and for each, against each subsidiary, you say this is the characterization, whether it's a distributor, whether it's a manufacturer, whether it's a service provider, or is it others. So there are 4 columns where you say profit is so much, these are my subsidiaries, this is my strength, these are my R&D department. You will be able to clearly see that there could be 2,000 people working in one service center and they will be making losses. And there will be only 30 people sitting in US and they will be making profit, which will clearly show in the CBCR report. Because you have to mention the profitability of each subsidiary separately. And you have to give the key employee details. You have to tell what they are doing it. So it is more on quantitative. Then comes your factual thing. Yeah, 2,000 people they are working. Let me put those 2,000 people in the future years. The entire team is working on R&D department. They are bound to make losses. And those 30 people are working only for this function. They are doing marketing function where you get commission from each customer 30%. They are making. So that's where the qualitative information flows on the master file. Then what have you submitted with the tax authorities as a local document? So this 3 has to be aligned. You will not be able to, for example, you will not be able to say, this from here you will say that management charges is flowing. From there you can't say that it is a dividend income there. Because all these facts will get captured in your master file, in your local file, and in your CBCR. And Indian tax authorities have a right to get the CBCR by way of exchange of information. Master file has to be filed in India. Local file also needs to be filed in India. So now they will have a global picture. They will know what is happening globally, what is each company doing, what is my role there. They will be able to understand what is the value chain of the entire group. Because you have to mention your key value drivers as one of the point in our rules, that in the master file you have to mention what is the key value drivers. And the moment you say my key value drivers are software, and there are 300% who are working on that software in your company, and you say that he is a captive service provider, then they say he is working on your key value driver. There are 300 people working from India and you say him as a captive service provider. There will be a question mark on that.
So will CBCR be mandatory when we are the foreign tested party for a different jurisdiction?
You are a foreign tested party?
For a different jurisdiction.
No, so in CBCR, the requirement is if your global revenue is more than 5,500 crores, you have to file it.
Okay. When you will test the global revenue?
On the consolidated financial statements, you have to test it there.
If the Indian subsidiary somewhere is the 10th layer, do you test at the first layer or you stop?
No, where it is getting consolidated. You stop at Indian financials where it is going and getting consolidated. There can be 10 layers. If you are getting consolidated 3rd layer, you stop at 3rd layer.
So what in a circumstance where there is a foreign tested party, the Indian entity is having a foreign tested party, and as per the laws of the jurisdiction, they are not required to pay CBCR, then what will the situation be in the Indian scenario?
That's fine, because that country could have just checked whether that country have filed an MLI, and if they have filed an MLI, India is bound to maintain CBCR, so they will get it from there. Even they need not get it from the local assessee or local subsidiary. They will get it from the portal, which is Exchange of Information portal, which they have signed that India will share the information with all those 97 countries, which the agreement has been signed. So CBCR, if you see, mostly it will be only with the headquarters where the entire results get this thing, and they will file it only in one country. The other countries they can download it because they have signed an exchange of information. If you haven't signed it, the Indian regulation says that if you don't have an exchange of information in place, or there is a systematic failure that you will not be able to get that report, then you have to file it. The same thing is for the master file. I don't want to get into that numbers like 50 crores, 500 crores. When your transaction value, you have to file a master file on this. So this are I'm just on the concept front. This is why it has been aligned, so that you know what is the value drivers, where does I'm exactly there. And okay, then I want to go on the TP adjustment. On this TP adjustment, it is for example, the TP adjustment where you are working at one remuneration mechanism, like say cost plus 10%, and before TPO says that no, 10 is not fine, 15 is fine, and you agree to it, okay, 15%. What do we used to do on that 5%? You will just offer it to tax. You will pay only the tax amount to the government. That 5% was never been in India by way of foreign exchange inflow. You just used to pay the tax portion of it. Now the regulation is that you have to collect that 5 as a foreign exchange inflow. This is starting from financial year 16-17. So if you see, why is it? There could be a record mismatch, right? You say that export of services, when you put that export of services, you say what is exactly documented as per the filings which you are doing from SEZ or STPI and whatever you are showing it as, and there's one database which gets created that this is what, plus TP amount, adjustment amount. This amount never used to come under India. And if you see, when you say export of services this much, and if you see foreign exchange reserve, there will be obviously mismatch, because this amount never used to come, because you used to pay only the tax portion of it. So that's where this is brought in. And second, the way I look at it, I will tell you, you work at cost plus 10%. I know that the right price is 20%. I should give you 20%. How many years will it take the Indian authorities to find that it will be 20%? What is our assessment completion date for each year when it is a TP issue? 4 years. You get plus 12 months, and now it has been reduced. So you get, after that you go to, based on draft order, you will file. You will get DRP. You will apply for stay of demand. You will go for ITAT, but there is no time limit. It will take 8 years. That 10% for 8 years, I can do whatever I want to do. You could have made that whatever the amount which I am going to, after, let me say 8 years, after 8-9 years, which I am saying a lesser time actually. There can be many years. This is normal time frame, which if I go 2 to 3 years for CIT, then 2 to 3 years for ITAT, 3 years, which makes 9 years completely. 9 years, I haven't paid that 10, I have not brought in that foreign exchange for 10 years in India. And with that money, if I have invested even in my bank, I could have made that 30% what I have to pay here. There is a loss, clear loss. So that's where the section was brought in, that you have to bring in the money. The moment there's a TP adjustment, you have to bring in that money. So this has been framed, but still they have allowed that if you are going for a dispute, if you are going, then you need not bring it, but if you are agreeing to it, you have to bring that money. So that is on secondary adjustment, or also if there's a voluntary adjustment, you say that yes, I know that 10% plus 5% I have to bring in. You have to invoice and you have to collect it, and you have to collect it within a time frame. You have to collect it within 45 days, or else there is an interest which will keep on getting charged, and it is a perpetual. There is no stoppage to it unless you collect it. You could have invoiced it and you will say that I will collect it after 3 years. For 3 years you have to pay the interest, and for that interest you have to again raise the invoice because it is an adjustment. So it becomes a perpetual concept. You have to bring in the foreign exchange. So alternate dispute resolution, I have explained that India opens bilateral. MLI, I have explained it. TIN capitalization is on, there's a restriction that if there is an ECB loan and you take out, even if India does not require a loan, you want to take out that profit, instead of dividend distribution, you have to take out as an interest. There were ways, but they are restricting it. They are saying that it should not be, a deduction is allowed only up to 30% for that year. The balance, you can defer it. It is not that they are not allowing, you can defer it. So your profit should not be siphoned off by way of an EB8, by way of interest. So that's, and that is also coming out from an OECD recommendation, which they have recommended long back. That. On interplay of TP and customs. Okay, this is little, this one on customs. The customs valuation when you are importing should be at arm's length price. And TP is also at arm's length price. So if you see going forward, TP, customs, GST, if you see when there's a transaction between related party, if it is at arm's length, you need not charge a GST. You are exempted from maintaining some documents which has been mentioned in the GST Act. So all those concepts are coming in, and so if you see, there will be, arm's length price will be so important that you have to maintain the documents, and which will help you justifying under customs and also under GST. And again, how do you determine? You go back to the benchmarking. You go, how do you do benchmarking? You first analyze who is tested party, then you go back to characterization function. Again, I am saying the same fact is more important. You have to document what am I doing really? Substance over form, what am I doing really? If you miss on anything, this entire exercise goes for a toss. Entire exercise.
Just a question on the previous point. We talked about the secondary adjustment. Assuming there is a case where I have aggregated certain transactions, purchase of machinery, interest, everything, and I worked out a TP adjustment, and I decide that okay, I'm going to claim this as a compensation from my parent company.
Okay. So you have aggregated the transaction.
TP adjustment, say of 2 crores.
Okay.
So ideally, I should bring in this money from the parent company as a
Yeah.
Now, certain issues which arise out of this is how do you characterize this 2 crore which is getting pumped in?
Okay. Yeah. So you characterize it as an income, because what is your primary thing? Your primary is to the income, so you characterize it as an income. So the question, I'm seeing it this from the different perspective, because just a second, I'll just complete this thing. If you are under SCZ, and for each foreign exchange inflow, you are entitled to get a deduction. Under 56F, you have to file that, and in which year you are going to claim is the question mark. Whether you will get the 100% and if the next year is 50%, that can be a challenge, but characterizing it income is fine.
Right. So in a situation, if I had only one transaction from my parent company, that is sale of goods to the parent,
Okay.
then it's kind of evident that my sale price was under invoice to the extent of this 2 crore adjustment, and therefore it's like a supplementary sales invoice characterization.
Okay.
But supposing if it's a variety of factors and I've applied a TNMM and then I'm not able to pinpoint
Okay.
like which area I fell short, how do you characterize this compensation?
Then your characterization is wrong at first place. Let me give, for purchasers, when you are purchasing it, it is a sale to them, right? And when you are purchasing it, are they not taking any profit on purchases? Will they sell at cost to you? So in that case, they are getting a guaranteed return for the sales which they are making it. So what is the characterization there for that transaction? The other entity is a tested party. When you have aggregated, you have actually made a blunder that you should not have tested the transaction in aggregate method, because in that case he is a tested party. In sale of goods, you are you are a tested party. Here he was a tested party, and you have mixed it and you have made India as a tested party. In that case, you will not be able to do anything. In the first case, you have characterized it wrongly and the tested party is wrong. That could have been the case. If you have characterized each transaction properly, then the answer could have been easy. You could be knowing that if he had made more profit on the sales which he has made, which is a purchase to me, or I have made a loss in the sales which I am making to them. When you are doing aggregate, that's where you get it wrong. For each transaction, you can aggregate transaction, I am not saying no, but you have to see in each transaction, are the risks are same. If the risks were same, then you could have made it only to the sales or the transaction which you are aware of. If you are not aware, then there is some, on the factual, I need more factual information to get to this answer. Because the way I see is the tested party, you have missed out on the tested party. If you are not able to come to a conclusion where, what should I do it?
Secondary adjustment. So once the TP adjustment is made within 45 days, amount has to be qualified, it will be as income. Now what if I get a favorable opinion at the higher level? Now,
So you will not be, so if you are so confident, you can appeal and you need not get that money. That's what the provision provides you for that. The problem is, if you are not going to get favorable, your interest will start accruing from the day of this TP adjustment.
Okay, let me bring in it. I brought in the money in the 45 days. So what is it? At the next level, when they say after 3 years or 4 years I get a favorable opinion, then will it be allowed as an expense?
So you are, so by what way you are bringing in the money? As an income. So you need not bring in, because you are agreeing to the fact that it is an income. So if you are not agreeing, then don't bring in the money. That's what I am saying. Because the moment you are invoicing it as income, it means you are agreeing.
To avoid interest, I may agree, but at the other forum I may
No,
not
so there's a two-blade. One way you are saying that I have to save interest, you are not confident that I will win the case. The other way you are filing the case, you are sure that you will win the case. It cannot be both ways. Somewhere you have to take that call. But because I know the fact, because if you are going to bring in the money, how are you going to send it back? If you are accounting it as income, then you have to get it out only by way of 20.92%. There's no other option which you have right now. Or the other way which I see is, instead of the real cost, what is the real cost? Let us get into that. The real cost to business is the cash flow impact, the working capital impact. If you see, if he is going to bring, he will account it as expenditure there. And if there is no difference between US regulation 35%, we are also net we are paying 34.61%. He will claim expenditure there, you will offer tax. Net on that cash which is coming to India is only the working capital which is going to get affected. If you see it from holistic view, it is only that portion. Only the opportunity of cost of that money coming in is the cost. Tax is never the cost. Because one way it is income, the one way it is a cost. Only if there is an arbitrage 25%, 35%, then the differential is another cost which we may account for. Else there is no cost. Tax is not a cost. So any questions?
The point of effective management, will it have any effect on this transfer?
Place of, yes. So place of effective management, so there are cases which have been on the PE issue. So if you see, whether it is a PE or not is again a question of facts. Whether you are entitled to take a decision. So there is a article which is, the BEPS which has come out on permanent establishment. If you are materially concluding all the contracts, you have the rights to conclude all contracts, then you are a PE. And if you are a PE, the question comes up that what is the money which which you should offer to tax in India. Then again it goes back to the transfer pricing. You collect facts, you characterize it, you test it. The only difference is, as a company you pay 34.61, here you pay a 40% tax. So the place of effective management is very important, because that again goes back to significant key function. Who is doing that significant key function? Whereas you agree that poem is here, I am a PE, there is a person here and in the other country, and you say significant function is done by someone else, there is mismatch. So that's what I am saying, it's very fact specific, very, very fact specific. You have to be consistent.
Thinking about that buyback of shares, it is cognizant. So that discounted cash flow, whether that is affecting the transfer. They wanted to tax that also now.
So you want to tax, yes, but where is the provision which is providing for it?
So that is why the amendment removes CAs from that. No?
So how I am looking through is that, if you see, right now India has not developed so much on the transfer pricing litigation front. If you see globally what is happening, every case, you take any case law, I will give you the case law's name, Meckenson. It's just on royalty management charges, simple case. The pages run into 300 page. I mean the case law goes into 300 page, where you will see there are 10 expert opinions, 3-4 testimonials which are done, and then the case is decided. So there are experts from industry are being called off. That how is this how industry works? Is this how it? For example, let me put. For example, you are starting in India. You are just starting your operation in India. As an investor, you start your operation. Do you think in first year anybody will be able to attain its practical capacity or installed capacity? No. Will you be able to make profit? Very doubtful. If you may, it is like big thing. But there are some players in market who are there for 15-20 years who are making profit. Can you compare with them? Your obvious point will be, I have not attained my capacity right now. How will I do it? The question will be, how do you justify this? After Schedule 6 amendment and all NDAs coming, you are not required to publish your production details and installed capacity in your financial statements. Earlier we used to have that data. See, my comparables are at 80%, I am at 20%, 60%, I am not able to. Do we have that data now? But in other countries, even this data are not available. If you see, RBI data is available. For this industry, the average capacity utilized by all the companies are 75%. So I can take leverage from there, but unless you have, you have to bring experts for transfer pricing, because it is very fact specific and industry specific. You need to have more industry knowledge rather than tax knowledge. The moment you have more industry knowledge, you can bring in the facts.
So in this case, very specific to capacity utilization, where you don't have data in the public domain to substantiate, on whom does the owner's right to prove that it's a comparable? It will still be with the assessment.
How do I answer this question? Because
if I take someone as a comparable, and I could not reject that or even evaluate.
So the first thing is it is on onus is on the assessee. That if you are making any adjustment, you have to make sure that it is reliable and accurate. That's the word which is used in rules. And if you can't prove that it is reliable and accurate, you can't do anything about it.
That matter, I cannot take any comparable.
You can take comparable will be there, but you will not be able to find out what is the difference.
So then it will not be a valid comparable.
See, I see it right now. This is not happening, and I don't know whether this will happen or not. As an assessee, you can, if there is no solution, there is always an High Court and Supreme Court to help you. You go there and you say that, can you just tell the assessing officer to do a fresh search under 133.6 for this comparables and tell me what is their capacity? Why don't you file that one?
If officer has to find out, where will he get the data?
133.6. He has all the rights. He can issue a notice under 133 and he can ask this information I need and I have to use it for it. He has the rights. No one has tried it because it has to reach there. Yes, sir. Any doubts?
Just one more
Yeah.
question. Generally, the TP officers, they are not open to taking comparables which are loss-making.
Okay.
What has been your experience? Where generally you don't find anything abnormal, but still companies generally.
So I don't want to share the experience of TPO because whatever it is there, it again goes back to ITAT, and ITAT, they agree with the loss-making comparable if you are ready to prove that it is functionally comparable company. You see so many cases where they say that it has to be functionally comparable company. And let me put you, if you are a contract service provider, if you are a contract service provider and you are functioning as a contract service provider, I will say that I will pay you only 5%, because if you see industry average, they are making only 3%. What will be your point towards me? You will say, sir, they are entrepreneur, they can make losses. If you see only assured companies, they are making 7% profit. So in that case, if you are going with the characterization of captive service provider and saying that
Then
it's very fact specific, you have to defend it. So it all boils down to your business facts again. Your business facts, characterization, tested party, and it goes back. So if you have characterized it wrongly and if you are defending it on the other side, it is very difficult. Because you can't go and say that actually my facts were different, I have mentioned it differently. You can't take a back seat. So it's very important how do you document it. And how will you be able to prove that substance over form if they are going to question it.
When we import certain products and the data from the customer itself is not having a comparison, because it's a very niche industry, then how will you get a comparison?
So, on customs, they have their own benchmarking tool, which is not publicly available, and they have their own special valuation bench, SVB, where they find out data, or they ask you what are your competitors. You may have one or two competitors here. They will ask what is happening in that. They will go and check how they are importing it, and they will come back with some rate. That's how they do it. And if you don't have comparables, because the time frame is very less, or I could have explained that how methods work. If you don't find out comparables, what you have to do, it's a niche area, because if you do, comparability is like, I will just take you just overview. Cup product has to be very similar. You use that only on bank rates, personal rates, home loan rates, bank rates. Resale price method you use only on distributors. Resale minus profit. You just buy it and you sell it. Then again goes back characterization. If you're doing advertisement, then you can't test him as a gross margin. You have to test him at the net margin. Right? When you come to the net margin, it is transaction net margin method, TNM, because at net margin, all those small functional differences gets away. There's another method before this is cost plus method. Cost plus method is majorly used for semi-finished goods and job workers. For example, your employee cost is 60% and comparable should also have 60%. Because you are saying it is comparable but at net level, but it is so comparable that both industry are same. Then you can't have variation in even expenses. The variation allowed is very less. But when you go to TNM, you test only the function, not the product comparability. So the cost can move here and there. So mostly you get only TNM method, most of them. Then there's a profit split method. So you use profit split method when both are doing a major function. Like major function in case I am an IP developer, you are a marketing guy. I do the technology, you will do the IP. So in that you have to split routine function. You will say for this routine activity, let us get this profit. The extra profit we will allocate based on the weightage of our function. So how that weightage is determined, there are no rules and regulation on that. You determine on the facts. That for technology you give 30%, for marketing you give 70% 1 year. Second year you say, technology is overseeding, market has become saturated, so I will not give you so much. So that is profit split method. You split the profit. First you split the routine function, then you split for the non-routine function, which is on that. And other method where you can't fit in here, then you go for another method. where you can use what method you have want to use. So that's the leverage which is being provided for the other method. And comparables, there are publicly available database, but you have to subscribe for that. It is not like Prowess, Capitaline, ACE-TP. There are global database, Osiris, Amadeus, so those are the databases.
We actually subscribed for that. We got data, not subscribed, we paid for it and we got the data. Even in that data, we could not get comparables at all because it's an ATM industry, they were purchasing ATM.
Can I take offline on this, because I can come and explain, because
So is it mandatory that I should have an external comparable, or if I have internal comparables I can just give that in?
okay, so internal comparable uncontrolled.
Yeah.
So you have to make sure it is uncontrolled, then yes, you can use it. So that's the preference. If you have internal cup or internal thing, that's better suited.
Even for DNMM, we can use internal.
You can use internal cup, yes.
How do you do that?
You segment it. You segment it, what is your profit with your international transaction, and then what is transaction with your third parties. But the, again I have to say characterization. For AE, you will be a contract service provider. For ER, you will be an entrepreneur. You can make losses. You have to factually document accordingly. Any other question, or we can? Thank you so much.
Thank you so much, sir, for sparing your valuable time with us. It was an outstanding session. Now may I call upon Mr. Jatin on the stage, please, to present a memento to our honorable speaker as a symbol of love and appreciation. On behalf of SRCFICI, it's my great pleasure to propose a vote of thanks. First and foremost, our sincere thanks to our chairman, SRCFICI, and to our honorable secretary, SRCFICI. Our big thanks to our respectable person, Speaker CA Kuldeep Sharma, for your wonderful sessions. Our huge thanks to CA Mr. Abhishek Murli and our CA Mr. T.G. Suresh. Last but not least, we are very grateful to all the delegates for your patient listening and your cooperation throughout the sessions. Thank you all once again. Have a great time ahead. Thank you all.